public television in the Central Valley. KBIE Channel 6.
The man who's made a career of sticking it to Wall Street strikes again. Charles Schwab on his latest and maybe greatest idea for investors.
The secret high-risk, high-reward world of hedge funds just might be an option for you. And that's only the beginning of Wall Street Week with Fortune.
Wall Street Week with Fortune is made possible by contributions to your PBS station from viewers like you. Thank you.
I'm Karen Gibbs.
And I'm Jeff Callden. Welcome to Wall Street Week with Fortune. Well, for the past many weeks, we've asked, have they no shame, usually about crooked corporations or malfeasant managers who've done dirt to America's investors. Who would have guessed we'd be asking that question about someone whose job is to protect investors? But you just can't help wondering what SEC Chairman Harvey Pitt was thinking. To head the important new Accounting Oversight Board, he favored William Webster, who told Pitt last week that he had chaired the audit committee of a company in which investors lost tens of millions of dollars. It's now nearly insolvent and accused of fraud. An audit committee that fired the outside auditors after they raised questions about the company's financial controls. Pitt decided this wasn't worth mentioning to the other commissioners who were about to vote on Webster's appointment. Now 3 investigations are underway and Pitt is becoming a punchline. The man Pitt originally favored for the accounting board job, former pension fund chief John Biggs, spoke with Bill Moyers about what's ahead for Harvey Pitt.
I think he has lost the confidence of his commission, and I think he's lost the confidence of the American public. And I think at this point, probably, he should certainly be considering resignation.
You can hear more of that interview on Now with Bill Moyers this evening on most PBS stations. Elsewhere in the struggle to win back investor confidence, Citigroup announced this week it would separate its investment banking business from its equity research operation, and it hired one of our favorite guests, Sally Krawcheck, to head research. She had been CEO of Sanford C. Bernstein, a research firm well known for its independence. Later in the program, I'll talk with an American icon, Charles Schwab, about his views on Wall Street advice and much else. And Karen will speak with a couple of investment pros who have some stocks and funds they believe you can invest in with confidence. Well, you can always listen to Karen with confidence. She'll tell you what really happened in the market this week, and whatever it was this week, it was good, right?
Oh, right, Jeff. In fact, October didn't let us down. Despite limping to the finish line, this October produced the best market results in over 15 years. For October, the Dow gained almost 11% and started off November with a stunning rally, adding another 120 points today. The S&P picked up over 8.5% in October and added over 15 points today, while the NASDAQ added more than 13% for the month and tacked on nearly 31 points today for the longest NASDAQ winning streak this year. But is this the real change in sentiment or a false bottom? Don Strotheim of Strotheim Global Advisors defines a false bottom as a near-term market bottom followed by a minimum 10% rise, only to see the market fall to even lower lows. Is this rally the real thing, a seminal shift, or just another head fake? Only time will tell. Morningstar style boxes show that investors are still willing to take a chance on small growth stocks, as seen in the lower right-hand corner, also up for a 4th week in a row. A bullish sign as small cap stocks generally lead the market higher. The small cap growth stock gain of almost 4% was powered by technology stocks, specifically Borland Software and Vitesse Semiconductor, and bolstered the bullish argument as we're entering the traditional seasonal November to April rally.
Well, they say every problem is an opportunity, and the recent scandals around tainted research at Wall Street firms have been a terrific opportunity for Charles Schwab, the corporation and the man. The original discount brokerage is conflict-free because it has never been in the investment banking business, a fact the company has been trumpeting for the past 6 months. But down markets are hard on every broker, including Schwab. I spoke with Charles Schwab, the man, now age 65, about all these things and more, starting with a new plan by the SEC and New York Attorney General Eliot Spitzer to create some kind of clearinghouse for independent research funded by Wall Street firms.
It seems like they're creating this thing sort of in what I call a mushroom factory. It's complete darkness. No one knows anything about this thing. The untainted firms like Schwab and many other firms like ourselves aren't even being called into question. How would this work? What is it all about? It's the most difficult thing I've seen in a long time, being created by the perpetrators are figuring out the solution. I think they need to deal with some of the people that aren't tainted and find out our views before anything becomes a universal kind of acceptance.
What would you think it would take to restore people's trust in those institutions on Wall Street whose trust has been called into question?
Well, I would say the quickest thing, as you know, if any tainted restaurant is serving tainted food, what they do immediately is mea culpa and make sure that they're not ever again serving the tainted food. I haven't yet seen that come out of the Wall Street firms yet. They're still sort of fighting, struggling. They haven't really accepted the reality of what's been happening.
Do you think that research needs to be separated formally from investment banking and trading?
Well, certainly research that goes to a retail person. They need to disclose and disclose and disclose of all their relationships, where they did fairness opinions, where they did investment banking fees, where the analysts made all kinds of money with respect to those corporations. All those kinds of things need to be disclosed plainly so that we all know before we read this material that it's not just a marketing brochure, that is indeed research, but based upon these kinds of relationships.
So in other words, let them keep the functions together, but disclose completely the relationships underneath them.
Well, I think that would be a starting point. I would go further. I actually have suggested to the president, to the chairman of the SEC, a code of conduct that deals with the conflicts of interest. And I would propose doing something like that would further give ammunition and protection to individual investors. Once the CEO and the chief compliance officer and the chief internal auditor of each major brokerage firm signs off on this code of conduct each quarter, then I'd feel much more comfortable, just like we do about financial reporting now with those new signatures.
Right. Now, your firm offers a form of research called Schwab Equity Ratings.
That's correct.
What's behind those?
It's based upon 24 segments of information that we study companies. It's all public information. It's put into a process, and we force rank every company of the major companies, 3,500 companies, from A, being a buy, to F, being a sell. And it's a force ranking of all companies.
And is the distribution of rankings normal or something close to it? It's not a case where everybody's a buy.
No, no, no. It's like 10% buys, 10% A's, 10% F's, 15% B's, 15% D's, and the rest of the body would be in the C category.
You've also begun running an ad campaign, a television commercial, about people who have switched from some other brokerage firm to Schwab. And we have it here.
This year, investors moved more than $30 billion to Charles Schwab.
I think Charles Schwab is actually almost the opposite of a Wall Street firm.
They treat me with respect. Well, I think they just get it.
Come see why there's never been a better time for Charles Schwab.
Now, a lot of people on Wall Street were already mad at you because of advertising you ran earlier that was very critical, and now there's this. Are you hitting them a little hard?
Well, let's put some lipstick on this pig.
I don't think so at all. I think we've got to face the facts, face reality. We have the most obscene thing happen in our industry in the last 2 or 3 years. It's been sort of prevalent there underneath the surface, but when it hits us directly in the face, the conflicts of interest are profoundly awful. And so, in my view, is that we need to clean up the street, so to speak, and make sure that we don't make these same mistakes going forward.
Now, the firm started long ago on the premise that you didn't offer advice. It was for investors who made their own decisions. So why change the philosophy?
Well, Jeff, you're absolutely right. 25 years ago, when I started the company, it was exclusively for people who were independent investors who could make their own decisions. But as we've grown over time, in fact, in the last 10 years, we've been offering various levels of advice. And now we offer, for those who want it, we offer a complete set of advice, and we can help them either make their choices about investing in mutual funds, asset allocation, diversification, or we can even help them to the point of referring them to an independent investment advisor.
Now, how do you make sure that the advice you offer isn't tainted?
when someone wants to have a discretionary relationship where they delegate decision-making to someone, we have that person who is completely independent of Schwab, gets paid directly by the client to them. They do the transactions through our firm, but they get the advice completely independent from that advisor. If someone has an account at Schwab who has a relationship just asking for financial planning and those kinds of things, they pay us a fee for that, and that's all they do. They don't pay commissions, they don't depend on IPOs and those kinds of things. So our advice, we think, is untainted. It has no relationship to investment banking, which is the real crucial issue right now that we're all looking at and aghast about.
Right, simply because Charles Schwab doesn't do any investment banking. I want to ask you a little about the market. You've been watching it for 40 years or more. What do you think it will take to bring investors back into the stock market in a big way?
Every down market creates this environment of...
Thank you for watching, and remember to like, comment, and subscribe.